We're going to hit the live button.
All right, ready we are.
$500,000 per year. And I'm not talking $500,000 over 5 years. I'm saying within 5 years, we're going to go into deep dive today on how to create a passively based income of $500,000 or more today. Well, thank you guys for being here. Welcome back once again. My name is JD, taking over for Dave. However, I've got El Jefe in the house as my guest. Dave, how does it feel to be a guest on your own YouTube channel?
It's wonderful. Somebody else has to do all the hard work now.
Excellent. Well, thank you, of course, for your time today. And that's exactly what we're going to cover. We're going to go into a deep dive on one of our very popular trainings. Dave has done this in the past before, but now I'm going to be sitting in your shoes, asking Dave all the questions about, hey man, is this really possible? How do I really get there? How do I avoid the mistakes? And what can I do to maximize my chances of achieving this, what seems to be a lofty goal, right? And so again, thank you guys, everybody, for being here. If you are on the YouTube channel or if you're in the Zoom room, post the questions in the chat and Dave and I will answer your questions as we move along. This is also a live Q&A format as well. And just for fun, if you feel comfortable, post where you're viewing this from, just so that way we can give you guys a shout out. And thank you again for joining. Kevin, I see you already on YouTube. Kevin's an avid follower from Lakeland, Florida. Thank you again for being here, Kevin.
Hey, Kevin.
So, yeah, thanks for being here. So let's get into this, Dave. So first of all, the thing that I want to maybe cover or highlight with people, like this seems to be quite a lofty goal, right? When I hear $500,000 a year, like it's like, okay, this seems scammy or whatever you may think of, right? Whatever comes to mind, especially when you're saying passive income, right? Which is like a hot button, item these days. So Dave, can you maybe just review to us, like, is it really possible? And maybe give us some oversight or your thoughts on the 500K.
Yeah, it's certainly possible, but the truth is most people won't do it. And, it may sound a little surprising to start that way, but anything that's substantially awesome in life, which I would consider making any kind of income passively or actively at that level, is rare and it's difficult. And it takes a lot of time and commitment and discipline. And it's something that usually never really happens overnight, but it takes, many, many years to build. So, the first thing I want to address is that it is something that it's within reach. It's within the realm of possibility, but you really have to give this thing more than just, a marginal effort. It has to be a consistent application for many, many years. And we'll get into more of the products that we're going to be recommending to sell, the way that you transition from one of the products to another, kind of the details that have to go along with it. But it is something that is very doable. But, again, you just have to be disciplined and focused. And for anything like that, and I would call that a top 1% income, it takes a special amount of that. And we're definitely going to go into detail about how to do that and how to start the process to making this a reality.
Excellent. Exactly. So I'm curious, if you guys are joining us live, post in the chat, let me know why you are here, right? Most of us who got into insurance at some point in time were sold on this idea or this belief that we can make a lot of money. Probably even before that, you were sold on the idea that we're out to help people, right? We're there to prevent the undue burden of families having to pay for the expenses of a loved one passing for their funeral and final expense, which can erupt into massive complications in families, right? We're there to protect that for folks from that happening. But also there's a little bit of, hey, what's in it for me situation, right? I want to make sure that this time, energy, and effort that I put into this industry is going to pay off in dividends in return, right? And so before we get started, Dave, I want to jump into first, let's talk about the products. What are some things that somebody would need to think about or consider prior to choosing which products to help them achieve this $500K a year?
Yeah, so you have to pick products. Obviously, if the goal is to have a passive income, you have to pick products that are designed to be passive in nature. And the products, to just kind of jump the shark a little bit here, would be any kind of health insurance product. They can be health insurance like ACA, Obamacare, or like what we generally recommend because they parlay well with our life product of choice, which would be Medicare. You need a product that pays a residual income, not just once, but for life. And if you pick one that's not going to do that, or that pays a low first-year commission, it's just going to be that much harder. The other side of this is you also, for most people, it's hard to start with the end in mind, meaning if you understand that you need some sort of residual-based product, a lot of the time starting with one of those is difficult because you're in this position where the cash flow from the residual product doesn't pay as well, and it's hard to support yourself and your family and your regular expenses. And so what we'll talk about today is getting into, well, how do you start with a product that pays you well so that you can develop a skill set, pay the bills? And then at what point do you transfer over into a residual-based product? Because again, we've tried this in the past, starting agents with Medicare and health insurance. It largely doesn't work because the advance commission is not there. The structure to get paid up front isn't there. And if you start with that, you run into some cash flow problems.
Perfect. Perfect. So exactly what Dave said. So essentially, to kind of boil it down to the final answer here is choosing two different types of products. One product that's going to be heavy in a first-year commission basis, so that way you can afford to, number one, make some money right now, and then two, to be able to maintain the lead flow that you need in order to keep your business going, right? And then the second product is something that's going to be very heavy and beneficial, more on the passive income, like a residually based product, like a health insurance product. So like Dave mentioned, those two products would be a life insurance product, which in our case is final expense, and then a health insurance product, which either can be, and traditionally we had covered Medicare Advantage, but now we can also include ACA, Obamacare, the under 65. Both of those products would fit that niche very well, right? And then in addition, but beyond those two, Dave, what would you say as far as like, kind of insurance in general is a little bit more socioeconomic proof or recession proof or inflation proof? Can you maybe dive into the importance of considering those aspects?
Yeah, sure. So I think if you're a new agent, it's really important to consider not just the product, but the market that the client's associated with. And what's going on right now is really exemplary of what happens if you pick a good product, but in a bad market. So take, for example, the interest rate environment, right? We're back to higher level of interest rates versus the historically low rates that we've seen. And why does that matter? Well, one of the biggest niches that we've seen over the past 10 years has been the mortgage protection market. And mortgage protection is sold as life insurance to cover the mortgage in the case of your untimely demise, so that you can pay off the mortgage, have peace of mind knowing your family's going to stay in their household. Well, what's happened now is that less houses are being sold than ever before. And the way that those leads were originated were traditionally from when a house was sold that becomes public record of the sale, and then you would market to those people, typically with direct mail. And so with housing sales going down, you generally have a collapse or a reduction at best of the mortgage protection market. And so if you pick a market that has more economic connection to the ups and downs of a particular aspect like interest rates, it may curtail or cut into your ability to be successful. This is why JD and I and our agency promote the final expense market, because there's a clear socioeconomic retirement boom going on, and will so for the next 20 plus years. There's 10,000 people retiring every single day at 65, or at least turning 65. And the implications of that is when people turn 65, their values begin to shift more towards a retirement type of value, preserving money, preparing for the end. And a lot of people are also retiring with less money than they anticipated, and they feel less security in the retirement. So that constitutes the need to have life insurance to pay for the certainties in a situation where there's uncertainty. Will they ever have enough money to take care of it? All of this does is promote a much more stable environment. Not to mention, our clients are all receiving a check from Uncle Sam every single month, and there's never been a time when that's ever been missed. And why is that important? Is because you got a market that's always getting paid every month, no matter what, versus the working man or woman that may lose their job if the economy upends and then may cancel your policy. So these are, in short, all the reasons why I like final expense. It's economically resistance to the ups and downs. There's a surefire trend of people who are retiring, therefore need this. And all of that promotes a level of security, I think, as a business model. And that's not just for the short term, but it's for at least for the next 20 years.
Perfect. Perfect. All right. Before we get any further, I just want to say thank you to the folks being here. I've got my friend Joe Nash from Dallas. Dave, he actually visited us at the Roadshow event, so I want to say hi to Joe. We've got Tennessee here, we've got Missouri, and then over here on this side in the Zoom room, I've got California, Tennessee. Thank you guys all for being here. So one person said they started to do insurance to take care of my kids after I'm gone. Perfect. All right, so let's get into this next, Dave. Now that we kind of identified final expense, Medicare Advantage is kind of the two products, the peanut butter and jelly of insurance, as I like to call it. For those that aren't aware, Dave, can you tell us what is final expense?
Yeah, so final expense is life insurance, all right? Now, there's these terms that we've used like mortgage protection, final expense. They're just life insurance products, but the term final expense mortgage protection is more of like a marketing term. It tells you and the consumer what its intended purpose is for. Okay, we're naming it to a much more applicable way of actually how it's used. So when we say final expense insurance, it's what's called simplified issue whole life, to take it a step further. Simplified issue, all that means is that it is simply issued based off of asking health questions in the first presentation with the client over the phone or in person. And the decision to approve the client for coverage or not is rendered on that first call. So it's simplified issue. We like that because traditional insurance takes sometimes weeks, if not months, to do a lab analysis, blood, urine, pull doctor's records. It's a long process that many people just simply will opt out of because there's so much friction in the buying process, right? Whole life insurance is the best way to think of that. Is it's insurance that lasts your whole life. It's insurance that never cancels due to age or health. The rates never go up for any reason. If the client health medically qualifies, they're fully covered for natural and accidental deaths from the first day. Now, all of that, why is that important? Because nobody knows when our final day is going to be. It could be tomorrow. It could be years to come. And the only other alternative for most of our clients may be term insurance. But the problem with term insurance is, like the name indicates, it terminates. It may not be there when you need it. You may outlive the term insurance coverage. And in many cases, our clients simply just can't qualify for it because of their health. So despite what the Dave Ramseys of the world say, term insurance is not for everybody. There's a particular mode of clients that do better with whole life insurance because it's easier to qualify for. And the face amounts, the actual coverage, is more suitable for what you would expect out of a cremation, $10, $15, $20,000, not $500,000 or $1 million, and are much more within the reach and affordability of a fixed income client.
Perfect. Yeah. And that was the next thing that I wanted to cover was, who is the target market for final expense, folks, right? So it's typically going to be the senior market, right? Folks that have been putting off life insurance for years and years and years. And now, in a lot of cases, they're too old to even qualify for term, even if they wanted to go that route. And the reality of death, right, gets more and more real every day. I'm about to hit level 4, right? I'm going to hit my 40 soon. And I heard on a podcast the other day, on a comedy podcast, they mentioned at a certain age, in maybe your 30s or 40s, you're now closer to death than you are being born, which is like, that was kind of a scary thought, right? So these folks that are aging up, right, a lot of them can't get coverage from term options, and they just haven't put anything in place yet. And the majority of the time, these folks are going to typically be your low income seniors that haven't had the chance or the ability to put money away to cover these costs, and they have no other option, right? And so by finding them some affordable coverage, and by affordable, I mean, most of these policies are typically less than $100 a month, and it's going to put that $10,000, $20,000, $30,000 in place to protect their loved ones from having to come up from that money out of pocket. So again, that's kind of what final expense is and who it's for. The peanut butter to the jelly. The next thing I want to get into is the jelly. Dave, talk to about what is Medicare Advantage.
Yeah, so Medicare, just to kind of go from big picture to little picture. Most of us know that Medicare is what you get when you turn 65, when you are retirement age, or when you start disability. Some people don't know that. If I fell ill and became disabled by decree of the law of the land, federal government, I would get Medicare started within 2 years of filing the disability or when the disability originated. So even if I was 20, We've had agents that have sold people who are on Medicare at 20 because they have some sort of disability. So Medicare is government health insurance, typically, though, for people who are retired. Inside of Medicare, there are two different plan options depending on what the client wants. You can keep original Medicare and then get what's called a Medicare supplement that just covers the holes in Medicare so that the client doesn't have these huge risks of out-of-pocket payments. And people who get Medicare supplements typically love them. But there's another type of product that's about, I'd say, about 15 years old or so. It's called Medicare Advantage. And the best way to think about what Medicare Advantage is that it's the equivalent and how it's designed to a private care plan that an employer may offer. It's got co-pays, deductibles, and so on. However, a lot of the plans now don't have premiums. Now, they're not free. Technically, there's zero premium. The government says we can't call them free, but there's no monthly premium out of expense or pocket expense for the premium for many of these plans. And the reason we like to sell these plans and why we think they're like the peanut butter to the jelly, like JD referenced, is that they don't have that out-of-pocket expense. And many people who end up getting Medicare Advantage plans are those same exact people that opt for a final expense plan. Very few people don't want just original Medicare. They feel it's important to get a supplemental plan, or in this case, a Medicare Advantage plan, to better cover their attempts, their ability, if they get sick, to be able to go to the doctors of their choice, the hospitals of choice, et cetera. There's a lot of other benefits to it that appeal to our clients. Like in some cases, you have dental care, vision and hearing care as well. Some of these plans even give like grocery card money every month or utility money every month, which is a big appeal. And so the point being is that these are plans that just really have a lot of appeal and don't cost our client any additional premiums in most cases. And it makes for the perfect cross-sell product to your final expense client.
Perfect. The next thing that I was going to get into, kind of what we've alluded to already, is that both of these products are focused on the senior market. Now, there's a couple advantages to focusing on this market and focusing on this area of insurance in general. Two of those reasons would be the senior market, right? There are going up in volume, like the number of people aging into Medicare or aging into the final expense is going up every year. And as an overall percentage of our population, the percentage of people 65 and above is going to continue to grow. The latest number I saw was over the next 10 years, there's going to be an additional 15 million people aging into these particular products. In addition to that, the average age of an insurance agent is going up as well, which is good news for me and you, right? Because these folks on average are in their 50s, which means that they're only going to be aging out. Like they're not going to want to continue selling this every year, right? And so that gives us two unique advantages as agents. Is number one, we've got a growing number of prospects or people to get in front of. And then number two, less competition, right? So those two factors together equal a fantastic opportunity for you and for me. There's a long-term opportunity for us as the market's going to continue to expand, as well as the two things that David mentioned is about being in an industry that's more inflation proof, as well as recession proof, right? One of the reasons, like I've owned several different businesses prior to getting to insurance, but one of the reasons that I always really thought this was a great business to be in is because when the economy's good, well, that's great. People have got more money to be able to spend money on insurance. When the economy's bad, well, now it makes it even more important to have insurance, right? Because you're less likely to have the cash laying around to cover those things that you're trying to insure. Dave, would you agree with those items?
I do. I mean, that's the biggest appeal to me. I got into, I'll paint a different picture. I got into final expense in 2011. And if you guys were around back then and aware, maybe had a job or had a parent who had a job, it was tough from about 2007, 2008 till about 2012. Main Street just got crushed. Stock market got crushed too, kind of early on and recovered, but a lot of people struggled. And all the while the struggle was, people were getting back on their feet, Main Street getting back on their feet from the housing collapse and the mortgage crisis and all that, the final expense business was chugging along. And you can look at some of our competitors. I'll mention them, Lincoln Heritage, year over year, those guys were growing 15 to 20% right during smack dab in the Great Recession. And why were they? It's because they are appealing to a market that has growth behind it, despite what the economy is doing. And in spite of the economy, the people who are retired still get paid. And that still happened during the Great Recession. And I think as a business owner, and you have to think of yourself as a business owner as much as an insurance salesman, you want to be in markets where there's less tumult or less risk associated. Well, if things don't go well that are out of your control, like the stock market and its impact on Main Street, that the business model will still function. Now, I learned that originally. I had a personal training business in 2006 or 2007 when I started. I went through the Great Recession there and saw my business lose half of its business in 6 months. It was terrible. And it was a great lesson in my life to learn. I only want to be in businesses that, regardless of what happens, there's still some underlying upward trend to make it better and still grow. And final expense and Medicare are definitely filling that for sure.
Perfect. Dave, I'm going to grab a couple questions that we've got
please. Thank you.
On the YouTube side. Joan asked a question. What would you say are the top 3 things that are good to know about products? I guess if you're selling a particular product from a particular carrier, like what are the things you want to know about it? Maybe that's how you meant.
Sure.
Or how do you interpret that?
I mean, you need to be able to explain. I don't know if there's 3, but I'll give you some pointers. You need to be able to explain the product like you would to a 5th grader. Okay. So if it takes you like 60 seconds to explain a simple concept and you can't use it with basic, simple English, and especially if their eyes are glazed over looking at you, you're not going to make the sale. That's why I say things like, for example, term terminates. Makes sense, right? Whole life lasts your whole life. These aren't like rocket surgery statements here, but they kind of demonstrate the main point, that you want to cross over. So for me, that's the most important thing, is taking the complexity of what you're selling and thinking of ways to say it in a simplified manner that even a 5th grader could understand. Because the functional literacy of our not so of our clients, but Americans, is 5th grade reading anyway. So you should be working to make things simpler to understand, not more complex. And then the second thing I can tell you, this above and beyond the product and its minutia and where it is and its AM Best rating, that all takes a back seat to your relationship with the client. Of course, I have preferences in which products to sell, but the truth is that the agent is what sells the product, not the carrier. People will buy from you if you come off as trustworthy and they believe you. They'll do anything you want them to do, okay? Because they don't have product expertise. And what people do, and when there's a lack of an expertise about a product, is they fill the void with, is this person believable? Can I trust them? Right. And so if you can practice doing that, and part of that is learning from a pro, having a great script and practicing and preparing, then you can sell anything, because people just think he knows what he's talking about. He listened to me. He understands what I'm looking for. Sure, I've never heard of XYZ life insurance company, but I think JD's got my back. So if anything that's important, it's selling yourself and how they believe you. That matters the most.
Perfect. Yeah, I couldn't have said that better myself. AJ says, I'm here to find financial freedom, protect families, and to help others become financially free. I love that. Thank you, AJ, for sharing that. And then we've got another question here, Dave. So to get a war chest built up with life insurance to survive long enough and then build residuals with health, is that what you're suggesting?
Yeah, so let's talk about the transitionary period, if we can kind of jump ahead, JD. So I think, how long should you sell life insurance till you get into health insurance or Medicare? My opinion is 6 to 12 months. Everybody's going to be different. Your budget needs and what's important to you as far as financial requirements are going to vary. But I don't think you should get started right away, because what happens with a lead-based Medicare or health insurance market strategy is that you're just going to have a low cash flow. And most people, they need to make money yesterday. And that's how I got into this business. I need to make money fast. And so final expense is a better fit for that. So assuming you diligently do final expense, or other life insurance products can work too, you need to be building a war chest. Okay. One of the pieces of advice I would give all you aspiring agents, entrepreneurs out there, is you need to live well below your means. If you've got a high nut that you got to cover every month, that's just terrible, because it's going to prevent you from really realizing a high potential. So, as Dave Ramsey says, what does he say? He says something like, beans and rice, rice and beans. That's what he says. Like you need to live meagerly, because once you can do that and be comfortable, even if you have a bad month, because this is a straight commission opportunity, it doesn't hit as hard when you don't have a huge expense that you have to hit. So usually for most people, it's between 6 and 12 months. My opinion is, as you get into that range, that you don't start Medicare during AEP. That's the end of the year that's about to start. It's the most popular time of season to start. Why not do that? Well, the problem is, most agents don't realize this, is the sales you make during annual election period from October 15th to December 7th don't pay you till January or February. So that means you're writing all this business, but not getting paid for months. Okay. What I prefer and recommend agents to do is to start January 1st. That's called open enrollment period. The business you write during open enrollment period typically pays within a couple of weeks max of when you write the deal. So the cash flow, the speed at which you get paid on closed deals, is now days to weeks instead of months. And that's critical, because as you start to get into Medicare, you're going to do just a day or two of Medicare and then still do mostly final expense. And then as you start to build up your book of business in Medicare and develop that passive income stream, then you'll slowly start to partition away and do more Medicare for most people and less final expense. Although some people stick with final expense and just cross-sell when they run across it. So there's different ways, of course, to do it.
Perfect. Yeah, and that runs us into exactly the next step that I wanted to get into here, is going over the numbers. What does it look like? What does a final expense policy pay? What does a Medicare Advantage policy pay? And how can we use both of those to our advantage?
Yeah. So because we're on a live stream and I don't have the numbers in front of me, I'm going to give you some rough estimates. Okay. So a final expense plan is going to pay $800 in premium on average. Now your commission off of that, boy, does that vary. You could be with us on a free lead program. You're paid 50% commission. You could be with us on a broker program. You're going to get paid 100% plus, depending on your level of advancement. So it's safe to say, when you account for other things like chargebacks, lapses, business you write that isn't approved, or the people cancel it, you're going to keep about half of what you sell. Okay. And accounting for lead expenses. So if you're writing an $800 deal, on average, you're going to keep about $400 net income, right? So if you do the math there, and let's say you want to make $2,000 a week, I would want to write 5 policies minimum a week. That would be my goal. It may take more than that, may take less than that, because this is just a rough average. Okay. So that's the rough net income per sale, money in your pocket you get after all expenses accounted for. Now for Medicare, it depends on the state. And it depends on if they're new to Medicare, first-time Medicare Advantage plan recipients, or you're replacing a plan and they're getting a new one. Let's just go with the replacements, because that's what you'll mostly write with the strategy. You'll write some new business, but usually not. So with the replacement, I think the numbers are next year for most states are going to get paid about $305, $310. Okay. And that is what you get paid each year for the life the client stays on the books. Okay. So if I sell JD and he's 65 and he keeps it till 70, and I've kept it 5 years, I make $310, exactly whatever that number is, times 5. So each year I get that amount every single year. So you guys can see where the benefit is in this. So what if I write 1,000 deals and I'm getting paid $300 a month, and I hold 1,000 Medicare recipients? I take care of them. I service them when they call. Well, I'm going to make 300 times 1,000. That's 300 grand in residual income, as long as I keep these clients and keep them happy. But what if they die? What if they cancel? What if something happens? Is it going to happen? Of course, right? These are old people. They die. They change their minds just like everybody else. But what's nice about Medicare is there's a ton of referral opportunities. The Medicare agents I know get way more referrals than the final expense people, just because they do a good job of servicing them, and people more likely to talk about Medicare. So even if you quit at 1,000, if you're out there talking, if you're taking care of your clients, you're going to get referrals. You're going to get people to replace the cancellations if you do a great job servicing them. So that's the appeal with Medicare, is that, and now the cost to acquire a client, I mean, that varies, and that's important to mention too, JD. So you may do direct mail. It may cost you $100 to acquire a $300 client. Now that's not bad, but the free and clear cash flow is just $200 instead of $400, right? So you'd have to write 8 Medicare plans to equate to 4 final expense plans. So you see where the kind of discrepancy in cash flow is. The other side of that too with Medicare Advantage is each month that passes, you're paid about $25 less in only first year commission. So by the time you get to July, instead of $310, you're paid $155, but your acquisition cost is still $100. So you're only clearing $55. So with each progressive month, it becomes less and less cash flow positive. All of this is to say, this is the challenge and problem when you're in a position where you got to pay the bills on leads and your own personal bills, which is why we usually don't advocate for Medicare as a first choice.
Perfect. And so if somebody wanted to look at the numbers specifically on hitting that $500,000 a year, let's say this was only for Medicare Advantage plans, right? We're going to average at about $300 per policy per year. So to hit the $500,000 per year, you would need about 1,600 clients on the books, right?
Yeah.
And if you did the math on that, you back that, like kind of reverse engineer, as I like to call it. 1,600 clients over 5 years is about 300 to 350 clients per year, which, by the way, it almost equals about one client per day. So when you're out there selling Medicare, if you could sell 1 to 2 policies per day, like you'll hit that number within 5 years.
I'll throw a few
ahead.
things, just some corrections here, just to be a little more realistic. You're on the right track, but most likely y'all won't start until year 2. So it's really in 4 years, you've got to hit 1,600 clients. The other thing you got to factor is people are going to die and fall off the books, right? So for me, I would factor in another 20% above what you need after you divide 4 into 1,600. So I would want you writing closer to 500 a year, okay? And if you want to hit this inside of the first 4 years, write 500 every single year. That comes down to about 40 people a month. That's just 10 apps a day or 10 apps a week. That's just 2 apps a day. That's not that hard. If you're good at this business and you've got training, you've got a great lead system, you should be doing that working 4 to 5 days a week, 40 to 50 hours. The thing with Medicare, it's the simplest sale in the world. You're selling something that doesn't cost the client a direct premium. You were selling final expense that you're asking these people on a fixed income to cough up $100 a month while they sit in their, trailers or government housing, and, they're not rich. Okay. So if you can sell that successfully, developing the skill set, to going to sell something for free that they get benefits for, that they already know and are convinced they need, I mean, the sales closing rates are a lot better. So there's a lot of work. Yeah. But again, it goes back to my original point. It's a lot of work, but it's achievable. I mean, we just worked it down. You just got to write 2 deals a day, 5 days a week for 4 years to get a $500,000 income. That's all it is.
Yeah. And thank you for the clarification there. And that's specifically speaking to if you're on this 5-year trajectory, right?
Yeah.
There's certainly people in our agency, Dave, that have come from the final expense world from us that have hit that number in much sooner, like in a year's worth or 2 years worth, will hit that kind of number. But then additionally, even if you didn't want to jump into Medicare that hot and heavy, like it could just be a cross-sell opportunity to your final expense business. For example, I've got a friend in the business. He's got over 10 years experience in final expense, right? He's got a decent amount of residual income from final expense. It's not much compared to what it would have been by Medicare, but it's a nice chunk of change starting off with, right? And now over the last 2 years, year and a half, he's somewhere between 100 to 200 clients, like simply by cross-selling the new leads, like just the new final expense leads coming in, not even buying new Medicare leads, not even going back to the existing business and try to just the stuff that you just walk over otherwise, right? And so one of the other advantages to starting with final expense is once you have them as a client, there's a lot of rules as far as Medicare that works with CMS, et cetera, on how you can contact these folks. But if they're already a client of yours, they're considered an existing business relationship. So there you have the opportunity to go ahead and approach them to ask them about their Medicare policy. Dave, does that sound right?
Correct. Yeah. That's the thing is, the other side of this business is people do business with people they already know, like, and trust. And if they've already given their social security banking information and told you their personal health affairs, they're likely going to want to do business with you on Medicare because they've already been convinced you know what you're talking about. And most people agree they'd rather have one agent for all their insurance if they could versus 5 agents for 5 different policies. It's just less complex. There's a sense of simplicity that comes with it that appeals to most people. So yeah. And a nice thing, I'll add this too. This is something I didn't recognize as being important, JD, until we initially recruited agents to go direct to Medicare. We don't anymore. And part of that reason, it's not just cash flow, but part of it's skill set development. Like if you can sell final expense successfully for a year, you can sell anything. And the thing is, a lot of people would come in on selling Medicare and they were weak. They were weak closers. They had weak work ethic. They didn't really work that hard, and they didn't have that really important developmental period working a tough business model like final expense. And when you carve out a living in final expense, everything is just immensely easier. So, and I can't stress that enough. And some things in life, to get to where we have to bridge to it. We just don't arrive. And this is kind of one of those things, in my opinion, because a lot of people like the residual income idea, but starting off with it, they miss so much as far as work ethic development, skill set, and closing, selling, prospecting that comes so much in handy with Medicare that if you don't get that, you're losing out a ton.
Yeah. And it's almost like you're reading the comments on YouTube, Dave, because I've had a couple questions on what if I had like the assets or money available to get started? Would you still recommend starting off with final expense?
I mean, yeah, sort of. I mean, we don't take agents that way. Part of it is the structure on pay for us. It's just not worth it for you to just do Medicare for us. For the amount of time that we invest in an agent, we need them writing final expense business, at least in the beginning. So it's not worth it to me, but it may be worth it to someone else. But here, I can tell you this, the best agents I've ever seen in this business that are hardcore and write good business, write a lot of business, guess what they started with? Final expense. But the worst agents I've ever seen that write 50 plans a year and ask a million questions and never do anything, they don't. But they're so, not saying that you're going to be that way, but it's, to me, I think there's some kind of value in learning how to sell insurance on a more demanding product.
Perfect. So just to recap, reasons why we like final expense and Medicare Advantage together. First of all, the money, right? Final expense is going to be very good on the upfront first year commission, but lower on the residual. Conversely, Medicare is very good on the residual, not as good as the upfront money, right? And then also one of the things that Dave kind of alluded to was final expense is a very simple product to understand. Like as your first leading product, new into the insurance industry, final expense is very simple. Like you said, a fifth grader could understand final expense and the nuances of it. But it's a much more challenging, difficult sale, right? Because you're asking for a premium, like sometimes $50 to $150 a month. Whereas a Medicare Advantage plan, much more difficult to master and understand, right? There's different carriers, there's different networks, there's different plans from each carrier. They all change by county, deductibles, max out of a pocket. I mean, you can go on and on and on. It's very difficult. However, it's much easier to sell, right? Because like Dave talked about, like most of them are $0 premiums. Like how hard is it to sell $0, right? And so again, just kind of the reason why we really feel like those two products kind of match up perfectly for those reasons. So with that all being said, Dave, it all sounds good so far. However, we both know not everybody's going to be able to hit these numbers. Not everybody's going to be able to achieve this massive amount of success, right? So what are some of those things, would you say, are kind of the biggest barriers to somebody being successful in doing this?
I mean, it's a work ethic issue to me, JD. I mean, it's an interesting thing when you start making money. The things that you thought were valuable or what you thought you wanted change. I mean, I can only, and this is part of the issue. Like the running joke with P&C agents is that once they make 100,000 a year, they just go golf. They've got their 400 or 500 clients, and then they just golf all the time and don't really work that much harder. And a lot of people experience that. I mean, and that's fine. It's not a criticism. It's just a reality. Like you get 200 or you get 300 clients, 400 clients here, you're at a 6-figure income. It's pretty good. And if you just take care of those people and work a little bit every week, you can do whatever you want to, right? And so that's part of it is some people realize they didn't need as much money as they thought, and they're quite comfortable, and success begets success to a certain extent. So that's one element. The other thing, it's a grind, like it's tough. It's not so much, it's not hard. It's just repetitive, and it takes a long time. To go out there every single week and write 10 apps a week for 4 years, that takes a very consistent person. that's not going to get distracted by the issues in life, that happen to all of us, right? So those are the other things. It's just staying on the ball. It's funny too, and I can tell you this from personal experience. Like, one of the other issues, the shiny object syndrome. Like, there are people who suffer from, ooh, this opportunity looks great, I'm going to jump off of this because I'm not making enough money, or it's not as great as I thought it was going to be. And they jump around and they never do the thing they're supposed to do to the level that they should have done. And they never really get ahead because they weren't focused in on doing one thing masterfully well. I can credit Alex Hormozi. If you guys aren't watching his channel, you should. Very good channel on sales and business development. But he talks a lot about focusing on one thing and giving it your complete attention. Because if you do one thing really well, the sky's the limit on the income. It really is. And that's part of the problem we all kind of suffer from, me included, at some point in my career, is being able to focus on one thing and being the best at it. So what the takeaway from all this, and I'll stop my lecturing. So a lot of this is really just mindset stuff. It really is. It's focus stuff. It's not like there's some secret lead that you don't have. It's none of that stuff. It's just doing what you're supposed to do for a long time. That's hard. Easier said than done. Yeah, for sure.
Perfect. Yeah. And some of the barriers to success, in my opinion, kind of center around a central nucleus, right? And that central nucleus is choosing the right agency. Having the right agency to set you up for success can literally be the difference between successful or not, like stacking all the chips in your favor, as I like to say. So how does choosing an agency play into this? Well, first and foremost is you're going to have the right training, right? In order to sell either of these or both of these products. You're going to need access to the highest quality of leads. You're also going to need access to the top carriers and multiple carriers, not just a single carrier. And then also you got to make sure your money's right. You got to make sure that you're getting paid top level commissions for your production. Anything on those, Dave?
Yeah, no, 100% agree with you. Those are all to me, like, you got to have that stuff or you're probably going to fail. The vast majority of you people watching, like, you got to have a great agency that's going to train you and support you. And unfortunately, in the Medicare space, a lot of these people are just contract mills. They'll get you contract and say, oh, you want training and support? Watch this video, but don't call us. They won't actually script develop and talk to you and help you through sales. Like, it's very frustrating. So you really have to keep your eye out on that. And then also be aware of how your arrangement is set up. A lot of people get into Medicare and don't know that they don't own their book of business, or they're paid a pittance for the business they developed, and they're really just making the owner rich, not themselves. You've got to be very aware. If you go into a system like that and you build something, you really don't have anything. So all of these things, these due diligence elements are really important. If you guys have questions about that, even if you don't join our agency, you're welcome to go to daviddeford.com/contact, send us questions. I'm happy to help, because a lot of agents make bad decisions when it comes to agencies because they just don't know any better. And we try to at least steer you, at least make you aware of things you should think about. What you do is up to you. But this business is awesome, and making bad decisions about the agencies you join, no matter what products, constitutes for a lot of failure in this business that's unnecessary.
Got it. Perfect. So what I would like to cover next, Dave, is let's go a bit more into the DIG agency, how we are a good fit for somebody who does want to achieve this massive goal right now, and then we'll kind of wrap things up with a little bit more Q&A. But essentially, some of the important things as far as choosing the agency is making sure that, number one, that you're vested from day one, that you own your own book of business. There's a lot of other agencies, and to throw a name out there, Primerica, where you only gain the vesting 10% of your book of business per year. So it takes you 10 years to own your book of business. So here at the DIG agency, you own your book of business from day one. I tell people, so if for some weird reason you went through our process, you made your first sale, the next day you decided you wanted to adios and go somewhere else, like 100%. We're not trying to hold anybody up over here. There's not locking you in a contract. There's not any non-compete clauses. Those things do exist out there in the world, believe it or not. So make sure that you're doing your best to avoid those things. Additionally, I would look for an agency that had high quality, top tier leads. And how would you identify a good lead? Number one, they're going to be fresh, meaning they just filled it out. This hasn't been laying around for a number of years. And number two, they're going to be exclusive, meaning you're the only person that the lead's getting sent to. Because, by the way, once again, there are agencies out there that will sell you what's nothing more than like a glorified name in a phone book and sell it to multiple agents over and over and over. And you're expecting to try to make money off of this. And by the time you get them on the phone, like you're like, dude, you're the 10th person that's called me this week, right? Like those sort of things happen. So making sure that you avoid those situations. And then also having access to multiple carriers. Dave, what has been your experience seeing people that had just a single carrier versus the advantage of being at a brokerage?
Yeah. So this is really directed for you newer agents. This is something you really need to consider. One of the choices you're going to have to make is, do you work with a one carrier solution, meaning there's one company, one product, it's simple, it's direct, it's easier to learn, or do you work with a multi-carrier solution, being what we call a broker, where there's multiple products, but multiple things to learn, a little bit more complex? Here's the thing. I chose the path of the broker because what I ultimately knew is that if I could take care of my client the best, the money will take care of itself. Okay. Whereas if you knowingly sell one product, and something's better than nothing, guys, don't get me wrong, there's good and bad. But if you knowingly sell one product and it's not the best as far as pricing, it's not competitive, it offers coverage that isn't fully complete, it's a ticking time bomb before even a mediocre agent, doesn't have to be even that good, comes in and says, hey, you've got XYZ company. I can get you the same amount. I can get you 10,000 coverage instead of 6,000, get you fully covered from the first day. And as long as they've got an IQ greater than 10, they're going to say yes 90% of the time. And this is the thing you will never hear from the pitches you guys know who they are if you're doing the research on them. They're not bad companies per se, but no one company can solve all of the major problems that a client has when it comes down to health. So I believe most agents should do the brokerage route, because then you can shop the major carriers and find the best options for your client. And and I'm speaking in final expense terms, but this is certainly true for Medicare. The way Medicare works is that in each county or each region, a plan with United Healthcare is going to be different in Chattanooga, where I live, than it is from Atlanta, than it is from Jacksonville, Florida. And if you just sell that one product, it may be perfect here, but crap in Atlanta. So you need to, and that's what we do and endorse, you need to have multiple carriers so that you can figure out which one's going to give your client the best option. That reduces the number of replacements, meaning the chargebacks you're going to get, and it increases the number of close rates that you get. So it does nothing but help you make more money and keep more of your clients. So avoid the one product solution options. Don't fall for the simplicity pitch. You're going to suffer financially from it in most cases.
100%, 100%. And tied to that, Dave, I would add commission in there.
That's true. Yeah. Commission typically is lower with the one captive, we call them captives sometimes, with the one carrier companies. There's just not, some people are meant for it. I used to throw more shade to them than I do now. I mean, I still think at the end of the day, you're just going to sell less and make less. But if you believe what I'm saying, and that kind of strikes you as, I want to get my clients the best combination of price and coverage, the brokerage route is the way to go. You'll go to bed every night knowing you did the best job you could for your client. You won't if you sell one product and you choose to sell one product.
Exactly. And if I were to highlight any one of those things, making sure that you got correct as far as choosing an agency, I would really probably put training, maybe even as the number one thing, the most important. Yeah. And in fact, Dave, we've done a survey of agents that have failed out of the industry, both from our agency and outside, and asked that exact question: was like, was there anything that could have been put in place that prevents you from failing out of the business? And consistently, one of the number one things mentioned was training. If I just knew what I was doing, I would have had a better shot. Like that goes with anything, right? Whether we're talking about final expense or otherwise. So what does good training look like? Well, let me tell you real quick what training looks like here at the DeFord Insurance Group, and that is here at the beginning of the year. Training has always been kind of the thing that we hung our hat on. That was a phrase I stole from Dave. But here at the beginning of the year, we really doubled down on how important the training is to us. And so we put coaches into place that every new agent that joins our agency is assigned a coach. And that coach is specifically experienced in whatever particular product or strategy that you decide to join, whether that's telesales, face-to-face, et cetera. So number one, these folks, they have experience writing business under their own pen. And I'm speaking of this in general, like, think about it for your case, make sure the place where you're going has this available to you, a mentor. I feel like a mentor can't even be more important than the agency that you join, the direct person that is responsible for making sure you're successful. But this is the reason why we spent so much time choosing these individuals. So number one, they've got experience writing business under their own pen. That one's obvious. That one makes sense. Of course, you want to learn from somebody who's done it. But even more important than that, in my opinion, Dave, is the fact that they have experience training other agents to be successful. Because if you guys weren't aware, being a top producer and being a top trainer or a coach or a teacher, an instructor in any industry, like, they're not always the same skill set, right? Just because you're Tom Brady or Patrick Mahomes on the field doesn't necessarily mean you're going to turn into a Vince Lombardi or a John Madden and be an elite level coach, right? And so specifically the coaches that we have in our program, they have both of those characteristics. The other thing I was going to throw out there real quick is that our coaches are on salary. Like, we literally pay these folks. So where their only number one mission in life is to make sure that you're successful, right? That's their one job. They're not out in the field trying to write their own business in order to put food on their table, which, by the way, if you're in that situation and your coach is, needs to put food on, like, if it comes down to helping you or providing for their own family, you got to understand, right? That's what they're going to put forth first, which is, again, the reason why we specifically structured our coaching program the way that we have. So kind of some of the other things that we do for all new agents, once you join the agency, for the first 1 to 2 weeks, I call it a boot camp, where you're in like a blitz style of training, just hitting it hard and heavy and preparing you as quickly as possible to either go on the phone or go out in the field. Like, we say 7 to 10 days. Like, there's some caveats to that, depending on which program you're in, depending on what your coach is, how exactly that first week or two looks like. And then beyond that, we have daily huddles every morning that even when I was out in the field riding, I attended the daily huddles every morning just to help keep my mind fresh and straight. And I was calling my coach, Dave, on a daily, if not weekly basis. Either I'm in a house and I have a question about something I need to close, or maybe I'm having a terrible day, or maybe I'm having a great day, right? And our spouse or our loved ones are only able to provide so much support and encouragement, right? It's going to be different versus somebody who's in the trenches with you that knows exactly what it's like to be in that position, to help walk you through that process. So again, I feel like the training is the most important thing when choosing an agency. Dave, did I leave anything out there?
Yeah, I contrast this to what you would typically expect. And if you look in the insurance business, if you're new, if you're experienced, you already know this. This is a giant MLM racket, okay? Like, the big players, the big 3-letter IMOs, ones mentioned earlier, traditionally are just mass recruit machines. They're meat grinders. And they care more about the volume of recruits that they recruit as opposed to the quality and the experience that you get. And so what invariably happens is a lot of people get into this business without the training, without the support, and nobody's there to help them. And a lot of people fail out unnecessarily because they just needed help with the script. They needed some advice on how to approach things. And this is a business that requires a mentor. It's really like the old Gilded Age, where you had a master and you had an apprentice, and you learned from somebody who knew the business in and out. But that's not the motivation to most of the people that runs the show. It's MLMs. It's mass recruit people to recruit people and then sell them a bunch of garbage, usually crappy leads, and make a ton of money from that. So we're not like that, guys. Like, the only thing we care about is recruiting the right people who adhere to our values and culture, that will put in the work to do as well as they can. And we'll show them the ropes. We'll do everything. And JD said everything perfectly about how the people are paid and what their concerns are. It's totally a completely different experience than what you'll find in any other of these IMOs. And I think it's been game changer for us, because we really invested in this model at the beginning of the year. And it's unlike anything else I've ever seen in the business. Everybody does it the same way, no matter what they say. It's just recruit people in at, breakneck speed. And hopefully you figured out, otherwise, sorry, you're going to sing.
Exactly. Well, We did leave a couple questions on the table here today, Dave, but in case you do have more questions that we didn't have time to, we've got a hard stop time. We've got some other calls and things coming up here. So in case we didn't get to your questions, I threw a link in the chat, both on YouTube as well as on the Zoom. That's a group Q&A option. So that way you can jump in there, ask some more questions, anything that you guys weren't able to get answered today. I host that Q&A. I'll be happy to go into more detail and more depth with you. Or if you're interested, you like some of the stuff that you heard about our agency, you want to learn more about it, again, jump into that link and head to that Q&A call. We can dive in and go over your situation and figure out whether this is a good fit for both of us, right? And so that's kind of what we're looking for. Before we go though, Dave, thank you again for being a guest on your own show. El Jefe, in case anybody didn't know, that's what he goes by around these parts. What do I need, Dave? What do I have to do to qualify for my own cool nickname?
I don't know. Good question. I'll think on that. Luis Moreno is El Patron.
Okay. Okay. I'm going for El Capitan. I think that's going to be my vote there. So
okay.
Can you come up with your own nickname? I don't think it's supposed to work like that, but
I don't care.
All right.
Sounds cool. We'll do it.
Anything else before we close it up here, Dave?
No, thanks for hosting this. Appreciate it.
Fantastic. Well, thank you guys all. And again, if you have more questions, I apologize we didn't get to them, but be sure to jump on the Q&A. I'll have much more time to talk to you then. Thank you guys for joining. We'll be back here live next week.
Bye. Thank you.
All right.